Looking at the Finance Bill 2024, most of the proposals within that Finance Bill are actually indirect taxes. So there are taxes on businesses which ultimately move to the final consumer. So as a Kenyan, whether you're talking about manufacturing, prices of products will go up. When you come to financial services, the transaction costs are going up significantly from 15% to 40%. So that for our financial sector, what happens is people will now start looking for other options of moving out of the financial ecosystem. And then that also just messes up with our investments and savings plan, because you can only be able to get credit from a financial institution when you have your record as to how you're transacting. But when you take money from bank and you go transact in cash, you actually disappear from our system and we can't be able to give you a mobile loan. So Kenyans will actually be able to have difficulty accessing these services that they have been able to access so easily. Ultimately, government is going to lose because when people are moving out of formal transactions, there is lots of taxes. And just in a day, you may do more than 5 transactions. And all those transactions, government is actually earning excise duty or the VAT that is introducing. So what you're telling government is be able to step back, not to be able to put all these taxes at a go. Like for financial institutions, what you're saying is our transactions world over do not attract both excise duty and VAT. They attract either excise duty or VAT. And what we are insisting on is that when you move money, there is no value addition to be able to apply VAT. So what you're saying is here we just move money from point A to point B, and what we recover from the customer is actually just a charge for our cost, but it's not a fee. It's not something like an interest where the government is coming in and saying, let's charge more. So what you're pleading with the government is, let's build our businesses, let's build our individuals to be able to produce more, and then create employment opportunities within the country, and then ultimately taxes will come in. Lastly, again, from the banking sector, the data that we have speaks to the fact that when we reduce the tax rates, actually we collect more taxes. Because just last year we reduced excise duty from 20% to 15%. We were able to increase the revenue from 40 billion to 45 billion. And then also the surprising thing is bank transactions increased by 26%. This is just a span of 6 months, from 1st of July 2023 to 31st of December 2023. So telling government is, let's work with volumes, numbers. Let's reduce the taxes, bring in more of the formal businesses, more of people who are transacting out into the ecosystem so that we can be able to get more revenue. And that's how we'll solve that challenge of taxing the informal sector.